Hi there, this is Tom Lee. I'm the Chief Investment Officer of Fundstrat Capital and the lead portfolio manager for Fundstrat's family of Granny Shots ETFs. This is the update for the week of December 15th. Keep in mind there are now 3 Granny Shot ETFs to choose from. The flagship is GRNY. Was launched a year ago. We now have GRNJ, which is Fundstrat's US small cap and mid cap ETF. And think of this as the junior version of GRNI. And the third is GRNI, which is a US large cap and income ETF designed to pay dividends monthly. As of December 12th, net assets for GRNY are $3.868 billion, for GRNJ, $165 million, and for GRNI, $36 million. So let's recap the performance over the past week. GRNY fell 0.48% last week compared to a 0.61% decline for the S&P, or relative outperformance of 7 basis points. GRNJ fell 0.38%, while the Russell 2500 gained 1%. So that was underperformance of 147 basis points. GRNI fell 0.24% compared to a decline of 0.61% for the S&P, or 10 basis points of outperformance. And year to date, and 2025 is coming to a close, GRNY is up 25% compared to 17.5% for the S&P 500, or relative outperformance of 780 basis points. Now, GRNJ has only been launched since November 17th, total gain of 8.79% compared to 7.83% for Russell 2500, or 96 basis points of relative outperformance. And for GRNI, again, since November 17th's launch, up 2.68% compared to 2.43% for the S&P, or 25 basis points of relative outperformance. So let's talk about macro. And as 2025 comes to a close, I want to really recap whether our themes are intact. Now, keep in mind, Fundstrat and FS Insight launched our 2026 outlook. And the idea and the key theme in our mind is that there's still a wall of skepticism and there's a new Fed. That's really what we'd keep in mind. In 2025, we talked about how there'd be 2 puts that make a right, and so stocks could still gain solidly in 2025, and that's what's tracking. But in 2026, we now have to deal with this wall of skepticism and a new Fed and wonder what that means. Well, as the late Art Cashin famously said many times, bull markets don't die of old age, they get killed by the Fed. And we have a new Fed this year, in 2026, I mean. In fact, we think the Fed put is coming back in 2026. Keep in mind, there has been no Fed put, which means the Fed isn't providing downside protection since 2022, because the Fed's been fighting inflation. But in the December FOMC meeting, the Fed Chair Powell said he's not contemplating hikes going forward. So that means the pace of cuts are just dependent on the evolution of the jobs market, which means there's a Fed put on the economy, which is a Fed put on stocks. Also, quantitative tightening ended in December, which means QE is essentially starting. And so 2026 is going to see a new Fed that's dovish, and the Fed put is in force. That's all good news. But it's not going to start right away, because confirming a new Fed chair is a process. And as you can see here, for both Janet Yellen and Jerome Powell, that confirmation process took about 90 days. So from the time we get a nomination to the time it's confirmed, expect 3 months. It's not going to happen at the start of 2026. So how does this impact our themes that we're currently using for granny shots? Well, style tilt is not affected because we know style tilt is adjusted every 3 months to reflect what we think are going to be the strong style leading markets over the next 90 days. Seasonality is not going to be affected by a new Fed either. Nor is the PMI recovery. possibly gets accelerated. But keep in mind, the PMI recovery is still a story more about where is the growth going to come from. And as this McKinsey study highlights, there is still tremendous future growth coming from a lot of tech innovation. What about energy and cybersecurity? Well, we know there's critical infrastructure needs, and we know energy security is needed for AI, and cybersecurity is growing in importance, and we're onshoring. These are probably only going to strengthen in 2026, even with a new Fed. And what about millennials? Well, as we know, millennials are their own cohort and demographic and still in their prime years. Nothing's going to change with a new Fed. And what about global labor and AI? There's a global labor shortage and the need for AI. Well, we've talked about it. There's a race to deploy AI systems. That's not changing. There's a lot of visibility, and it's just a matter of time before markets really start to see the products and services that get people excited. So AI spending visibility is there. Stocks can wobble like they have been recently, but again, that's just markets trying to discount the future. And if you think stocks are expensive, keep in mind Nvidia is only at 27 times earnings. Costco is at 45 times, Walmart's at 39 times, and Cisco got to 210 times in the dot-com era. So it's still not expensive. And as for easing financial conditions, well, we've got a dovish Fed. So that's really a tailwind. But remember, this is also going to drive innovation from banks because now they're going to have capital flowing. And of course, that's bullish for crypto. And as we talked about, Wall Street is embracing the blockchain now. So let's talk about GRNY stock performance. Let's start with GRNY. And the top 5 contributors to performance were, as you can see, a lot of financials and industrials. The bottom 5 performers were Meta, Quanta, Netflix, Broadcom, Robinhood. These are basically AI and meme stocks, and they've been falling post Oracle earnings. But again, we just view this as short-term profit taking. We would not want to take action. On the mid cap side, GRNJ, the top 5 performers are Rocket Lab, Royal Gold, Ally Financial. So financials, space, and commodities. This has to do with space travel. And again, as you keep in mind, SpaceX is planning to potentially IPO or exploring IPO. The bottom 5 performers here are all AI-related stocks. So, and let's think about how themes perform this week. The top performing theme is easing financial conditions. Guess what? It makes sense. The Fed is dovish. The second is energy and cybersecurity. Makes a lot of sense. This is not changing just because people are worried about year-end dynamics. And the third is seasonality. And again, we have a Santa Claus rally starting soon. That's it for now. Thanks for listening, and I'll speak to you soon.